Okay, let's do this. Hello, guys. Welcome. We're really grateful to have you with us in this rainy day outside. So we're happy that you're joining our workshop. My name is Nick,
And I'm Geri.
and today we are taking you step by step through building your investor outreach engine. Big thanks to How to Web and the entire team for inviting us to be here with you and to share our knowledge with you. A quick disclaimer before we begin. Everything we include in this presentation is our own opinions and based on our own experience. We do not believe it's the universal truth or the only way to do things. So pick and choose whatever works for you and apply it if you want in your own companies. A little bit of context about us before we begin. We've spent our entire professional life so far working with startups. For the past 5 to 7 years, we've been working at 11 Ventures, one of the leading VC funds for our region, investing all across Central and Eastern Europe. This is where actually Gary and I met. Back at the VC fund, we've been leading deals, supporting our portfolio companies and our fund operations. And throughout our time there, we noticed the struggles of fundraising for founders at any stage, at any caliber. And we realized that fundraising is pretty hard, complex, and frustrating. Most founders, as you see, don't really understand how VC works. They approach the wrong people with the wrong story at the wrong time. At the same time, investors speak their own language. They have their own lingo. They have their own expectations that many times founders don't know. There's a ton of contradicting advice everywhere, which confuses founders even more. And all of this is happening while you need to be building your company. You need to be pushing your product forward. You need to be hiring a team, opening new markets, selling, doing marketing, and so on and so forth. The fundraising process is not just about creating a deck and sending it to 5 investors. This is why we created our company, Fundraise Ready, where we basically help early stage founders understand how VC works so they can fundraise faster and easier. We have boot camps, masterclasses, templates, guides, one-on-one support, courses, everything to help founders with 2 things: preparing your company for a fundraise, getting the house in order, so to say, and executing a more successful fundraising campaign. Because as VCs, we learn to approach the fundraising process with focused strategy, excellent preparation, and good timing. The way we see the fundraising process is that it involves 4 main stages. Stage number 1 is preparing the company for investors, or as I said, getting the house in order, understanding if you're fundable and what are the things you need to get in order. Stage number 2 is preparing your fundraising materials and systems that help you to find, pitch, and convince investors. The 3rd stage is executing the actual fundraising campaign. The 4th stage is getting the term sheet, understanding how VCs work, understanding how the term sheets work, understanding how to navigate the due diligence, and create a little bit of urgency. This whole process takes months to complete. Today, we don't have months. We have 35 remaining minutes. So for the remaining time, we're zooming in to stage number 2, preparing your fundraising materials. When it comes to preparing your fundraising materials, there are 3 types of materials you need. Materials that help you to find investors, pitch investors, and convince investors. When it comes to convincing, this is your data room. Imagine your financials and budget, go-to-market strategy, market analysis and competitors, and so on and so forth. Everything in the data room. When it comes to pitching, it's pretty straightforward. This is your storyline, this is your pitch deck, this is your one-pager, and the blurb that you use for your company. When it comes to finding investors, is where we think some founders get really confused. And this is where we have this thing called Investor Outreach Engine, where today we're walking you step by step through how to actually build it for yourself. Today we're going to go through 6 steps of this fundraising outreach engine. Step number 1, defining your ideal investor profile. Step number 2, setting up your CRM. Step number 3, building an investor list. Step number 4, crafting your elevator pitch. Step number 5, writing your outreach emails. And step number 6, setting yourself up for warm introductions. At each stage, we're going to show you examples where applicable, because we don't want it just to be theory. We want it to be something that you see in practice. And everywhere, we will be sharing with you our own personal worksheets and templates for free. So be ready for the big QR codes that you can scan and get these resources. This is going to be a very high-paced session for the remaining time. So are you ready? Let's do this. Passing on to Gary for step number 1.
Thank you, Nikola. Very happy to be on this stage today. So after Nikola has set the floor already, so you know what to expect from the session, let's dive straight into the first step, which is defining your ideal investor profile. Your ideal investor profile is a definition of your best fit investor. Imagine like an ideal customer profile, but for investors. And why is it important to have this definition in the first place? Well, because you don't lose time with the wrong people that will not give you the right feedback and will just make you lose your focus. Also, you can craft your pitch for a specific audience. So it is one thing if you're pitching to, let's say, climate investors. It's a totally different story if you go to generalist funds. Afterwards, you can even personalize your outreach. So if you scrape a random list with 10,000 VCs, there is no way you can meaningfully personalize this. And as you will see, that's quite important. And if you're approaching just 100 or 150 that have been cherry-picked, then you can personalize your outreach. And last but not least, when you do receive rejections, and you will, no matter how good your company is and your pitch is, you can count on those rejections to inform you and to learn from, because they will be coming from relevant people. Now, what goes into your ideal investor profile? The first one is the investment stage. Does the fund invest in the stage that you're currently at? And logically, only approach investors that do. The next one is the geography. Is the fund even allowed, or is it a practice for them to invest in the region you're based in? So for instance, if you're an European company, it doesn't make sense to approach US investors that only invest in US companies if you don't have any sort of business there. The third one is the average ticket size, basically from how much to how much investors invest. And then as a rule of thumb, try to stick close to investors who invest closer to your round. Afterwards comes the industry focus. And here you meet 2 types of investors, generalist funds and specialized funds. The generalist funds, in theory, invest in just about anything. But in practice, most of the times, they also have some preference. So our advice is always to research them as well. Whereas specialized funds, they only invest in 1, 2, 3 verticals. And it does not make any sense to approach them if your company does not fall into one of these sectors. Next one is the business model. So you will meet, or probably you have met, some VCs that will tell you we only do B2B SaaS, or we only do consumer, we only do marketplaces. So try to research this as well, and again, approach the right ones. And last but not least, VCs can be very helpful with many things. They can help with hiring, market entry, with strategic advice. Not all of them do that, though. So depending on your needs and the stage you're at, you can have this as a criteria when choosing the investors you want to reach out to. Now, we're open to any investor who likes what we are doing and can help us grow. It's not a very clear definition, obviously. A way better one would be this one. We are raising a 1 million seed round and looking for a lead VC who invests in seed stage, B2B, SaaS startups, typically writes tickets between this and that amount, is based in Germany or the DACH region, has experience backing health tech companies, can support with hiring, and the list goes on, depending on your needs. A few advices from our side on how to define your ideal investor profile. Well, include all of the things that we already mentioned: stage, check size, sector, geography, and investment thesis. Then always research their past investments and also their public statements to understand what sort of things they value. Check if they're active. And here, two things can help you understand that. First, whether they did an investment in the last 12 months. And the other one is whether their latest fund has been raised within the past 5 years, because typically that's the investment period for funds. A few mistakes to avoid is ignoring their investment focus altogether. You know it, but you think they'll invest in you because you're very cool. Chasing famous VCs instead of VCs that are better aligned with your story. Approaching investors in direct competitors. This is a big one, so highlight it, because they will not invest in your company, but might be curious to learn more about you so they can give this information to portfolio companies. Very bad practice, but just keep this in mind. And finally, not looking beyond capital altogether. Now, this is our first free resource for you that you can use and define your ideal investor profile for your businesses. I'll give you a couple of seconds. Ready? OK. So let's move on. And while we're on the topic of ideal investor profile, it actually matters whom within the fund you approach. So in a fund, you typically meet 3 roles: partners, investment roles, and operations. The partners are the most important ones because they, first of all, manage the fund, and they also are the ultimate decision makers. If you don't have the buy-in from partners, there is simply no deal. The next ones are investment roles, and then depending on the seniority, these people might be going at events, meeting a lot of companies. They serve as the first filter within a fund. More senior ones, like principals, investment managers, they also lead the deals. Then come the operational roles, like financial, legal, HR, marketing platform. These are rarely people that are engaged in the pre-deal phase. So they only work with portfolio companies. As a rule of thumb, whom to approach within a fund? So if you're cold outreaching to people, go for the investment roles, because it is part of their core job description to go through the deal flow and decide whether this opportunity is the right fit for the fund. If you can get a warm intro, aim for the partners and skip the gatekeepers. And rarely, if you have a warm intro with operational roles, you can also approach them, but always be very specific and ask for introduction with the relevant partner. Whomever you approach, do your research upfront about this particular person, what they like, what they are like, and also try to approach the people within the fund that have the most relevant experience with your industry. So with that, we conclude step 1, and I'll pass the mic back to Nikola.
Thank you, Gary. You already have your ideal investor profile. And as a next step, we're going to set up your CRM. But what's your CRM? Think of your CRM as your fundraising command center. It's the single source of truth for progress on the investor conversations that you have. Why is this important? It's important because fundraising is basically a sales process. And without the CRM, it's nearly impossible to stay organized, to delegate tasks, to follow up on time, or to scale the outreach. A few tips to rock your CRM. You can use any tool as long as you actually use it. You can use the most expensive CRM and pay hundreds of thousands per year, but if it's not getting used, it doesn't really matter that you have it. You can use Airtable, HubSpot, Trello, Notion, Streak, etc. We always advise the startups to start with something that is already being used in their organization. Or, believe it or not, a simple spreadsheet makes miracles. And you'll see in a little bit more about that. Some mistakes to avoid with your CRM. Not logging meetings, responses, or follow-ups. Because trying to track everything mentally is very hard, and you will definitely forget. I always give this as an advice to founders, that not logging constructive feedback from investors is a big mistake. Because you're talking to people that meet hundreds and thousands of startups every year. So they know what works, what doesn't. So use these investor meetings as a learning opportunity for you. Now, this is your resource here. It's our template that we actually use with the companies we work with that you can scan and use in your own fundraising efforts. Just waiting for everyone. Maybe I should move. Yeah, there we go. Okay. What you can do is you can open it because we're going to walk through it very briefly. You're going to see a bunch of tabs. There's instructions, etc. Feel free to use it. That's easy to understand. But there are two other tabs that you'll be using most of the time. It's Overview and Investor List. Overview is a tab that gets automatically populated, so you do not edit, touch, or change this tab. It's basically the overview of your pipeline and of the entire process. What is the stage with each investor? The tab that you will be using most frequently is your investor list. And let's take a look. It has two parts. First part is contacts and research, yellow. The second part is process tracking, blue. Pretty self-explanatory, but still, let's go through them. The contacts and research gives you all of the information, not gives you, but it's a place for you to input all of the information about the investors, their contacts and research for their funds. In this column, two of them, you can expand and get more information, which is based on your ideal investor profile. What's the stage of the investor? What is their geography that they invest in? What are the industries? And so on and so forth. When it comes to the process tracking, there are some pretty straightforward columns. There is your priority, it's your best warm intro source, it's your status, last and next contact date, and your notes. Moving on to step number 3, building an investor list. What is an investor list? This is a list with investors based on your ideal investor profile to feed your CRM. Why is it important to have an investor list? Because investor outreach, we believe it's a numbers game. You want a wide pool of investors in the top of the funnel. Because many times, investors might reject you for different reasons, many times not even related to your company. Maybe they're not in an investment stage, maybe you're not in the right geography, maybe you're not approaching the right person, etc. And to illustrate better that fundraising is a numbers game, I want to give you some statistics on the averages when it comes to the investment outreach funnel. There are generally 6 stages in your communication with investors. There's outreach, where you try to reach to them. There's initial interest from them, where they answer your messages, request some more information, etc. There's the first call that you do with them. Then the follow-up calls, where they show more interest and dive deeper. There is the partner meeting, also called IC meeting, investment committee, where they decide whether to proceed or not. And then you have the term sheet offer. Imagine that you start with 100 investors as an outreach. The statistics, the averages, show that 40 to 50 out of these 100 would show initial interest, 30 to 40 would get on a first call with you, 10 to 20 would get on follow-up calls with you, 3 to 5 would get to partner meeting or IC discussions, and out of the 100, you receive 1 to 2 term sheets. Have in mind that this varies depending on your stage, traction, geography, many other things. These are averages, real numbers from funnels that we've seen. So some tips to rock your investor lists. Use Crunchbase, GeoRoom, Signal. You can use public lists, but be very careful and selective with them. We've all seen them on LinkedIn, on Twitter, etc. Comment list, so I can send you the list, etc. Be careful with those. Aim for 100 plus qualified investors. Research every investor individually. As you remember, put that information in the CRM so you have the context. And tier your list A, B, or C, depending on the importance of that investor for your company, industry, and round. Some mistakes to avoid. Scraping random lists off the internet. The problem with random lists without being checked is that there might be zombie investors in them. Zombie investors are investors that are not in their current investment process, but they collect pipeline so they can still be talking to companies. So they do not have money to invest, and it's a waste of time for you. Mistake number 2 is including investors who are not part of your ideal investor profile. That was pretty clear as well. We went through that. And our free resource here for you, we've pre-vetted and collected 8 public investor lists for you. They are up to date, and they are getting they're getting updated frequently. So the likelihood of zombie investors is lower. I'm waiting for you to scan, see a bit more people. It's 8 of them, of these lists. I think there's thousands of investors in them. Great. Moving on to step number 4, passing on to Gary.
All right, so by now you have your CRM, and ideally you have included in it 100 or 200 of your ideal investors. So let's craft your messaging and messages that you use when you approach these investors. The first one that we will start with is your elevator pitch. Your elevator pitch is a short description directly answering the question, what do you do? Why you should matter about your elevator pitch? Because it shows you have clarity and focus, and it also helps investors understand, because quite frankly, if they're not able to grasp your idea within the first 1-2 sentences, they very quickly lose interest. Besides, you will literally use your elevator pitch everywhere. It's the basis of your written communication and calls and meetings. It is what you answer every time we are being asked during this conference, hey, so what do you do? Now, let's look at 2 examples of elevator pitches that can help and inspire your own. The first one follows the format of what do we do, and then an example, and we will look at Airbnb for that. So, what do we do? Airbnb is a marketplace where you can book a home or apartment when traveling for work or vacation. And the example is, when you visit New York City with your family, instead of staying in a cramped and expensive hotel room, you can stay in a comfortable 3-bedroom apartment at the same price. And the second format is based on the following structure: the problem we solve, and then how exactly we solve it. And we will look at Stripe for illustration. So, the problem they solve. Stripe makes it easy for developers to accept payments on their websites or mobile apps. And how they do it? We do this by providing a simple and well-documented payments API that any developer can instantly start using straight from our website. Here is our next gift for you. Next to the 2 templates that you just saw, there is a third one, a lengthier one, that you can use as a basis for your emails, for example, whenever you need. All right, I hope everyone is ready. Next one is your cold email. The cold email is the first written communication your investors will see from you, and it has to have a very clear value proposition and a clear call to action. Why you should care about that and write it in a nice way? because it is the first impression about you. And it literally is the difference between pass and, this makes sense, I want to learn more. You should also know that investors go through thousands of emails, and they're trained to scan them in just a few seconds. So how you structure your email and how you make the most important information pop out matters. Now we'll look at an ideal structure of a cold email. We always start with a personal greeting, hi, and then the name. Forget about dear sir, madam, or to whom it may concern. This will not work. Then, and this is probably the most important part in my view, is the personalization. In this part, you give your reason as to why you contact this particular person. And you can mention here a recent interview, a deal they did, a focus on your sector, anything that shows them, they know us and they want us to invest in them. Afterwards comes a short sentence about why you're the best team to do that, and an even shorter version of your elevator pitch, followed by your most impressive traction metrics. Depending on the stage, these can vary, but in general, you can include here revenue metrics, customer metrics, LTV to CAC, pilot signs, patents, whatever shows that you have an impressive traction. Afterwards, don't forget to mention how much you're raising and what for. Also, always include any committed amounts because they create a bit of a FOMO effect among investors. Almost final, this is your call to action. So if you have not sent your deck, this is a good place to ask, would you like me to send my deck, for example, or suggest a meeting? And finally, make it easy for the investors to learn more about you by including your LinkedIn profile and the website of your company. And let's look at an actual example of a cold email for even better illustration. Hi, Julia. I'm coming closer because I cannot read. Hi, Julia. I saw your focus on health tech in C through your investment in Informatica and thought you might want to hear what we were building at Mediopad. So far, this was your personalization part. We are a 7-person team with deep experience in healthcare workflows and B2B SaaS. Mediopad is a platform, etc. This is your elevator pitch. Some quick highlights, and then they mention 35K MRR, 15% month-over-month growth, 120 plus clinics signed, CAC, LTV, etc. We are raising 700K to localize the product and expand into the German market, and 450 has been already committed. Now, what to remember from this step is always keep it short and sweet. The email in no way has to make the investors to scroll, so it has to be very short. Always start with a warm personalization. I cannot stress this enough. Show your most impressive traction, end with a call to action, so they're pressured to answer. Plan for follow-ups, because in many instances, investors will not reply after the first email, so it's normal to send them a reminder, but make it in a human way. And if you can also reach out via LinkedIn or on a conference saying, hey, I sent you an email, would you like to talk? This is a great way because then they'll know you're real, you're not a bot. And then what to avoid is, as Nikola already mentioned, just sending generic or mass blast emails to a random list, and failing to mention some of the key ingredients of your round, like round size, geography, or industry. This is your next resource, which is the template you just saw. You can use it to write your own code email. I'm moving back. All right. Now, quickly to Nikola.
When talking about investor outreach, there's no way we can't mention some of the tech tools that you can use. So we're going to show you 5 of our favorites. By the way, these guys are not paying us to do that, but it's just ones that we like and we recommend. First one, to find the email of literally anyone by their name and company, Find Email is a pretty handy tool. In order to check if your email could trigger spam filters, Mail Meteor has an absolutely free tool to use where you just paste your email and it tells you if there are any spam triggering words. Tool number 3 is mail campaigns tool, smartlead.ai. That it's pretty handy because it has multiple inboxes, flows, etc. Number 4, we talked about personalizing investor lists and how important that is. Clay is a pretty good tool for that. And number 5 is Strake for tracking email opens in Gmail. I personally use only that. They also have a CRM within Gmail. If that works for you, feel free to use it. We're moving to step number 6 because we are advancing on time. Back to Gary.
This is the final step. So you have your investors, you have your messages, you have your cold email. Now let's go and address and contact some investors. What is the best way to do that? Through warm introductions. And a warm introduction is any sort of personal referral that comes from people that investors already trust. Why are the warm introductions important, and why do investors care about them? Venture capital funds receive thousands of pitches, as we already mentioned. And the warm introductions help them to pre-vet, pre-filter some of the opportunities. VCs always prioritize deal flow coming from their warm network. So having a warm introduction can dramatically increase your chances of landing a meeting with a VC. And here I'll be very short, but what can you do about nailing this step and having the right warm intros? You can first start by creating a list with all of your contacts that can potentially make you an introduction with various funds, and then ask them to do that. The next thing you can do is start with your list that we just built together and trace mutuals through LinkedIn or Signal or some other tool to understand whether someone from your network knows someone from there. A good tip is to always ask for double opt-in intros. Check what it means if you don't know it, but it's an important one. And make it very easy for the referrers to introduce you. Always provide them with a 2-3 sentence blurb that they can very easily just forward and pass on. Keep in mind that the very best introductions that VCs receive are from their portfolio companies and then fellow founders they respect, and then also investors, mentors, but those two are probably the most valuable ones. And what mistakes to avoid? First one is asking for intros without providing any sort of context as to why you need an intro. Not answering immediately when you're being introduced, because this is the first signal, the first impression that you're giving investors, and it's very important that they know you take this seriously. And finally, letting contacts come up with their own introductions. Not only is this making it more difficult for them, but also you're leaving it to chance how your company is going to be described. So this was the end of step number 6. Quickly passing on to Nikola to wrap up the session.
Guys, as a quick wrap up, so if you haven't been here until now and you didn't hear anything of what we said, we want to give you our best investor outreach tips, our golden rules. I'm going to go quick through them, so bear with me. First, warm intro is the best way to reach an investor, period. It's a numbers game. We talked about that. Have at least 100 prospective investors in your CRM. Successful outreach requires research. Research takes time, a lot of it. So plan for that whenever you start your process. Stay organized. Log and track all of your conversations. You'll need that later, and this will improve your process dramatically. Prepare your pitching and data room materials in advance. The last thing you want is preparing a financials and budget plan the moment that the VC asks for it. Following up 2 to 3 times is absolutely normal. But whenever you get an email back or a warm introduction, answer back promptly. And last but not least, you'll get hammered with rejections. But that's part of the game. Do not give up. What we covered in the last 35, 40 minutes is just a tiny part of the process. This is why Gary and I, as part of our first initiative at Fundraise Ready, launched a bootcamp, which is called Fundraise Ready in 6 weeks, which basically is a live group online training for founders in 6 weeks where you help you to become fundraise ready. We provide a ton of, we think, value, over 14 hours of live training, packed with resources, Notion toolkit, with templates, playbooks, guides, everything basically that we know packed in there. We give you a fundability assessment sheet, which is the most important part even before starting to talk about fundraising. Are you actually fundable? We give you a fundraising timeline to help you as a co-pilot in a way, step by step, and many other things, investor lists, live feedback, etc. If that's something that sounds interesting to you, the next cohort for us is starting on the 3rd of November. We are around. Let us know. We'll be happy to help. Thank you for your attention.
Thank you.
We ran out of time, but we're around the whole day. So if you're struggling with fundraising, come and talk to us.
Yeah,
Thanks.
and connect on LinkedIn. Let's stay in touch. We're always happy to chat.